Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Portillo's, that beloved hot dog chain. Get ready for a saucy story because this isn't just about dogs and fries. It's about expansion, challenges, and whether they can keep that delicious Chicago flavor going nationwide. We're going to unwrap their latest financials and see if this iconic brand is still cooking up success. Let's start with the basics. This report is dated February 25, 2025, so it gives us a snapshot of where Portillo stood at that time. These kinds of reports are required by the SEC, the Securities and Exchange Commission, so that everyone has access to the same information about publicly traded companies. The heart of this report is the earnings announcement for the fourth quarter that ended in December of 2024. We're going to dig into how well Portillo's actually performed during those months. The company included a supplemental earnings presentation along with the report. Think of it as a visual aid, and we'll be taking a look at that too. Now let's jump to the good stuff, the financial statements. These are the numbers that tell the real story of how Portillo's is doing. Here it is, the press release announcing those fourth quarter results we mentioned earlier. This is where Portillo's puts its best foot forward, highlighting the successes and framing the challenges. Let's see what they're saying. Time for that supplemental earnings presentation. This can give us more context and a deeper understanding of the numbers. Companies often use these presentations to highlight key metrics and explain their strategies to investors. I wish I could show you some of these presentations, but instead, I will talk about them. Alright, let's break down some key numbers. Comparable restaurant sales grew by 5.4%. Basically, this is like measuring the pulse of their existing restaurants. Are they selling more food than they were last year at the same locations? A positive number here is generally good news. The restaurant contribution margin increased by 140 basis points. If basis points sound like nonsense, 100 basis points equals 1%. So their restaurant contribution margin went up by 1.4%. This means their restaurants are more profitable. They're either making more money or cutting costs effectively, or both. Total revenue jumped to $179.4 million, an increase of 13.4%. This means Portillo's is bringing in a lot more money overall. This can be from new restaurants opening, increased sales at existing locations, or a combination of both. Okay, the bottom line, net income was $3.7 million, which translates to 5 cents per share. Net income is what's left after all the bills are paid. It is also important to know how many outstanding shares there are. Speaking of shares, they have approximately 71.7 million shares out there. This number is important when calculating earnings per share and other key financial metrics. Expansion alert, they opened 4 new restaurants. This shows Portillo's is actively growing its footprint and betting on continued demand for their food. Opening new restaurants is a big investment, so it shows they're confident in their business model. That growth strategy is really important. They want to keep expanding across the United States. It's not going to be easy because growing always comes with risks and challenges. And of course, inflation and costs are pressuring them. They're dealing with higher prices for ingredients, increased labor costs, and other expenses which can squeeze their profit margins. Every restaurant is feeling this right now. On top of that, supply chain issues are a pain. If they can't get their ingredients or packaging on time, it can affect their ability to serve customers and potentially hurt sales. Opening new restaurants might cost them money or might be more expensive than expected, and that's a big thing. Their reputation is also very important, and something like food safety incidents or social media controversies could really affect people and their decision to visit. They're also subject to a lot of laws. Restaurants have to follow a ton of rules around food safety, labor practices, and other things. Staying compliant with all those regulations can be complex and costly. Insurance is a big deal. If they don't have enough insurance, they could be exposed to big financial losses if something goes wrong, like a major accident or lawsuit. Now let's look at some of those financials. In 2024, their total revenues were $664 million. This is a big number. We've seen them continue to grow. Their net income was $12 million in 2024. While positive, the company can continue to improve this number by driving revenue or by cutting costs. They have approximately $70 million in current liabilities. Liabilities are financial obligations to other people. It is important to see if a company has more liabilities than assets. They have stockholders' equity of $240 million. This is calculated by subtracting all of the company's liabilities from its assets. A company with a high stockholders' equity is considered financially secure. So what's the story here? Portillo's had a pretty good year in 2024. They're growing, opening new restaurants, and people seem to really like their food, but they have some challenges. Inflation, supply chain issues, and the complexities of expanding nationwide could be tough to navigate. Looking ahead, Portillo's strength lies in its brand and the loyal following it has. People love those Chicago-style hot dogs and Italian beef sandwiches. If they can keep that quality consistent as they expand, they have a good chance of success. One of the risks would be expanding too quickly or losing focus on what makes them special. If they start cutting corners or sacrificing quality to save money, they could damage their reputation. Overall, Portillo seems to be on a good track. The financial results are positive and they have a clear plan for growth. However, they need to stay focused on managing costs, maintaining quality, and navigating those external challenges like inflation and supply chain issues. Thanks for watching. If you enjoyed this corporate deep dive, please like, comment, and subscribe for more financial analysis. We'll keep decoding the corporate world, one report at a time.